If you're staking crypto and earning rewards, you might be wondering how HMRC treats that. Is it income? Is it interest? Is it even taxable? In this video, I'm going to walk through the tax implications of staking in the UK. I'll cover when it'll be treated as income, when it might be tax-free, and what happens when you eventually sell the tokens. Let's get started. Crypto staking has become a really popular way to earn a bit of passive income, but the tax rules around it are often misunderstood. Now, in simple terms, if you're staking through a proof-of-stake blockchain, then the rewards you receive will usually be taxable income from the moment you receive them. But you do need to get the income classification right, and I'll cover that in the next section. Later on, when you sell the tokens, you may also have a capital gains tax liability if the value of the tokens has gone up since you've received them. And we'll work through an example of that in the capital gains tax section later. One important quirk to be aware of is liquid staking. Now, if you're staking, say, Ethereum on a platform like Lido, you will often receive staked Ethereum in return. Now, HMRC views that as a crypto swap, which is a taxable disposal in its own right, even before you consider the rewards that you receive. And just to be clear, this video is about proof-of-stake staking only. It does not cover DeFi lending or yield products, which are often referred to as staking, but can have very different tax consequences. We're now going to look at how tax applies to those staking rewards that are treated as income. Now, for the vast majority of people that are just earning a few rewards here and there, their income is going to be treated as miscellaneous income. And that income becomes income at the point you receive it, and it's the market value of the rewards that you receive. So if you receive 10 tokens as your reward and they're worth £1,000, your income is £1,000 at that point. Once you've determined the value of your staking income, it's then time to consider your expenses. Now, for most investors, their expenses will actually be quite small from staking. So for those investors, it's actually worth looking at the trading allowance, which is £1,000 allowance for miscellaneous income, self-employment income. And how it works is, rather than claiming your expenses, you can claim the trading allowance. And that means that if your staking income is £1,000, then effectively, once you claim the trading allowance, you've got no profit and no tax. But if you've got income of, say, £1,500 from staking, you can again still use the trading allowance, and that would reduce your income from £1,500 to £500. Now, £500 is what you would put on your tax return. That income would be mixed in with the rest of your income on your tax return, and it will either be taxed at 20%, 40% or 45%, depending on your marginal rate of tax. So income tax that we've just covered on staking rewards is only part of the equation. When you receive your staking rewards, often you're receiving those in token form, so you own new crypto. When you go on to sell, swap, otherwise dispose of those tokens, you're then creating a disposal for capital gains purposes. Now, your base cost for those tokens that you're selling will be the value, the market value, when you receive them as staking rewards. So if you receive staking rewards worth, say, £1,500 and you later sell those tokens for £2,000, then you've got a gain of £500. The £1,500 was already taxed as income, and your £500 gain is then taxed under capital gains tax. That was a simplified example of how you would calculate the gain on your subsequent disposal of your staking rewards. But in practice, you need to make sure you use the share pooling rules. And I'll drop a link in the comments for the full detail on that. To recap, staking rewards are usually considered income the moment you receive them. That income is usually considered to be miscellaneous income, but you do need to consider whether your activity amounts to trading. The staking rewards could be tax-free if they're covered by your trading allowance, but you do need to confirm your eligibility, particularly if you have other sources of miscellaneous income or trading income. Finally, when you ultimately sell your tokens, you do need to consider your capital gains tax position based on the change in value since you received them. Thanks for watching, and if you found this useful, please hit like and subscribe. And if you would like the full details, check out the link in the description.